I thought there would be one, and I actually postulated there might be two Fed presidents that had the balls to say we may need one more rate hike. I was really disappointed that one of those members didn't at least. Again, I don't think we need another rate hike to get to this be clear, but I want the threat of another rate hike. And I was severely disappointed that that didn't happen. As we mentioned on the daily financial news for April 1st, this is not an April Fool's joke. Let me just get that out of the way right now. The 10-year note is ripping. We had a PCE core number that was as expected at 0.3. We had, what is it, 2.8 or something for the core year-on-year number. So nothing frightening. In fact, that number came out Thursday morning. So you would have expected the bond market to react Thursday. I don't know what happened over the weekend. We'll top this off with gold is setting all-time highs nominally, not inflation adjusted for all you gold bugs out there. That would be 1981 in case you care to do the math. But at the end of the day, gold in the 10-year are ripping. I can't think of anybody better to talk to than Taylor from Life Goal Investments, who plays across this entire landscape. How you doing, bud?
I'm doing great. Yeah, it's interesting times. I mean, oftentimes you don't see gold hitting all-time highs at the same time as the stock market, right? Those are
No,
kind of
not normally. No,
counterintuitive. So it's an
that's not on
interesting
my
little
bingo
pair.
card.
No, not on anybody's bingo card. So it's kind of counterintuitive to the broad kind of landscape. But yeah, I think that this is a reaction to some of the underlying inflationary data. And although the underlying inflationary data with things like PCE didn't show up in a scary way, you're seeing some underlying components really start to flare up. And I think that this might be the market reacting to that a little bit because when you think about the treasury yield curve, the front end of the yield curve is going to be reactive to the Federal Reserve. So you think
Correct.
about 2 years into 3-month treasury bills. As the Fed, makes it look more or less likely that they're going to move rates, it will go up or down commensurate with that thought. The longer end of the yield curve, 10 years and further out, is all about future inflation expectations. And so right now you're getting a pop in the 10-year, and I think that's indicative of the market going, okay, I do see some underlying fundamentals that are going to say higher for longer inflation, and we'll see, and we can talk about that.
Yeah, we haven't spoken since the Fed meeting and the infamous dot plot. I'm curious, were you surprised that they held three rate cuts as the kind of average when you looked at all 19? Were you surprised that there were still three?
I was. I thought that would come down to more likely in the two ballpark. I think what's most likely this year, again on my bingo card, and what the heck does that mean? Is one rate cut. I think that's
Ah,
in all
you're in the one
reality.
rate cut. Yeah.
I am, and for the record, that has come with stickier inflation, right?
Oh,
That
of
that's where
course.
that's coming from. So last year I said, listen, 6-7 that was being priced, and I said that's absolutely ludicrous, and you agreed with that last year.
Yeah.
We said, listen, more likely it's somewhere around 3, but inflation has just persisted higher, and I can't understand why the Fed members and the market have not said, listen, we don't see that. And that's not the way they're talking. They're not talking like 3 rate cuts are coming. Jerome Powell, that is.
Hmm.
But the underlying statement of additional information has absolutely stated that.
Yeah. Well, the other thing that was interesting, like when I looked at the dot plot, this was my takeaway. They're keeping three rate cuts. However, their expectation for the economy better. Their expectation for inflation better. Their expectation for the job market better. I'm like, I couldn't tie all of that together. It was crazy.
I totally agree with that sentiment because you look at that and you go, all of this doesn't equate to continued 3 rate cuts. And there was a little bit more of a negative
Yeah.
movement or positive, I mean, a more of a hawkish versus dovish, meaning although it was still 3, there was
Yeah.
a slight shift more towards the 2 camp, if you will. But it
Yeah.
still landed on 3 at the end of the day.
Yeah. The other thing that I was surprised about, and I don't know if you share this or not, but I'll throw it out there. I actually called this ahead of the meeting and I was clearly wrong. I wore my shirt swing and a miss because I was wrong. Um, I thought there would be one, and I actually postulated there might be two Fed presidents that had the balls to say we may need one more rate hike. I was really disappointed that one of those members didn't at least. Again, I don't think we need another rate hike to get to this be clear, but I want the threat of another rate hike. And I was severely disappointed that that didn't happen.
Yeah, so and I am curious, what camp are you in at this point when it comes to hike, cut, et cetera, now through the end of the year?
If you were to put a gun to my head, again, I'm not, I usually have a very strong opinion, as you know. Um, I don't have it today, but I'll go in the zero camp.
Yeah.
I'll go into
Yeah.
zero
It's
rate
interesting
cuts.
because our last conversation, I think, was a month ago, and a month ago, you put me on the hot seat and you said, "What do you think the odds of 0 hikes were?" And I think I said it was a third.
Right.
And I think that that's where I probably would still sit. I think it's increased. Well, no, I would say it's increased. I think it's now like 40%, somewhere in that
Yeah, that's
ballpark.
exactly the number I had, 40%. Like
Yep.
it's the biggest option, 40%, but there's also one, two, three rate cuts that make up the mass. So
Yep.
yeah, I'd agree with
Yeah.
that.
It's interesting though. If you look at underlying commodities, commodities are booming this year.
Yeah.
So you look at oil's 12, 15% this year. Let me just see. I
Something
have the
like that.
number here. 15% this year. Food is up 12.2% this year. Last week, the commodity index alone, underlying
Hmm.
commodities went up 2%.
Yeah.
So listen, there's a lot of pressure under the surface there. And a big one that now I'm not sure how important this is, but the movement on it has been absolutely massive is the cost of shipping this year. And
Yeah.
so the geopolitical risk is spilling through there. The Suez Canal and the Panama Canal, both being closed essentially,
Mhm.
are causing these ships to go down past the Cape of Good Hope in southern Africa, and then also around the southern port of South America. So it's just, you have this massive movement there and pressing prices higher.
Yeah. I again, inflation stickier longer. Again, I don't think Powell can say no rate cuts, but I think that's kind of where we are. The other thing that I think is really interesting is I think July is the last month they can cut because there's no meeting in August, and I personally don't believe they don't cut for the first time in September, too
Just
close
because
to
it's
the
too close to
election.
the election. Yeah.
Yeah,
Yeah.
so they got
It's
to
a,
cut in
it's an
July
interesting
or be done.
it's an interesting thought because the data right now, we both seem to be in agreement. The data doesn't align with the ability to cut in July.
I don't know. Yeah, something has to go the other way. And then the other thing I think is gold. I mean, gold's up, I don't know what it is, 10, 12% in seemingly 90 days. What is that? Is that a fear trade? Is that central banks across the world just, gobbling up gold? What any thoughts on why gold is suddenly ripping?
So there's some underlying components there that were interesting that I heard on a podcast recently that I thought was either conspiracy theory or reality. And the reality is when Russia invaded Ukraine, essentially a lot of the world said Russian central bank reserves, we're just taking them. If they were
Yep.
if they were invested in our country, you're done with them.
Yeah.
And so what a
Sorry.
lot of folks, yeah, yeah, sorry, we love you for the investment, but we're not giving it back. So a lot of people say, listen, this calls into question whether that is a safe investment for a foreign government or a foreign
Mm,
institution at all. Is to say, listen, if you thought you were going to buy the U.S. Treasury and we were going to give the money back, yeah, good luck. That didn't happen. And so, what's
mm.
the other safe haven trade out there? And it's gold, and they're buying it up in bulk. And so, yes, that is absolutely a massive pressure there. What's interesting to me is that there's a couple of things playing on the gold market. So, gold's hitting all-time highs. The underlying gold miners
Hmm.
are off like a third from their all-time
Yeah,
highs,
really
which
weird,
came like
right?
2 years ago. And so now granted, there's labor input costs that go into things there. There are fuel costs that obviously these big machines operate on, but there is a massive disconnect there. And I think that there will be some compression. I don't know if that's I think it's likely via the miners coming up. And I think that's an area where, you know, interesting to dabble in these days for the right investor.
Well, you know what? I'd be remiss if we didn't throw in the last kind of thing that appears to be ripping. It's hit all-time highs in the last, I don't know, 3 or 4 weeks or so, and that's of course Bitcoin.
Yep.
Bitcoin ETF. I guess a lot of millionaires kind of moving 1, 2, 3%. The ETF, BlackRock took their ETF to, I forget what it was, 11 billion faster than any other ETF. What's going on in the Bitcoin world?
Yeah, it's interesting. I actually didn't think this was going to be as big of an upward pressure because at the end of the day, when you look back and you say, listen, there was already a Bitcoin ETF. Now it was not a spot Bitcoin ETF, but I actually looked at this and was like, in reality, it's exposure, right? You're getting
Right.
exposure, whether it's the spot price or the futures price. Is it that big of a difference at the end of the day to a highly volatile asset class where it might be a few basis points of difference in where one goes versus the other? I was like, hey, I don't know, but the hype was real. And
Well, I think you just saw the big, money houses go, we're going to market here. And we're going to try to get 1 or 2 or 3% of our high net worth individuals. It's always been an insurance. That's just great marketing,
yep,
right? Take 1%, you're not going to feel it. throw it on this thing. And oh, by the way, it's up 100% or whatever it is in, 90 days or whatever.
And how about the 360 out of the big firms CEOs that
Yeah.
were just squawking at it, saying you have got to be a moron. Charlie Munger's point
It's
was
a pet
rat
rock.
poison. Right,
Rat
a pet
poison.
rock. Exactly right. So, but they were all in the same camp to say, listen,
Yeah.
this is for drug dealers and
Money laundering.
terrorists
Yeah.
and this and that. And then they're like, you know what? There is
We can
some
make some money.
real money to be made here. Let's do this, baby.
Shocking. All right, so we got the 10-year, we got gold, we got Bitcoin, we got stock having a great, strong Q1. Just kind of wrap this up. You again, as Life Goal Investments, you look across all of this, and I guess Q1, not a bad quarter.
No, amazing quarter. And I've got a post today that talks about when Q1 is as strong as it is, what are the subsequent 3 years come? So we can talk about that in another video, maybe.
Just so I'm clear, the next 3 quarters or the next 3
Next
years?
3 quarters. No, 3 quarters. Sorry, I misspoke.
Yeah, that's right. Very cool, man. We'll do that. Where can people find you? Because again, you put out daily content that is just really educational, and I have no idea how you do it in 60 seconds. Very
Yeah,
impressive.
I appreciate it. Thank you so much. Yeah, follow us at Life Goal Investments. We're on both Instagram and TikTok.
Awesome. Thank you.